Hi, my name is George Dagnino. I'm the editor of the Peter Dag Portfolio. What I would like to show you today is an analysis that I show on page 4 of every publication, my twice a month publication. And why? Because it's been uncanny. Is an analysis of what market sectors are doing. That is where the money goes in the market. And from the way the sectors perform, it shows you where the money goes and what the economy is going to do and possibly what kind of markets we are facing. So let me show you what I mean. This is the chart of our business cycle indicators. They are proprietary indicators that we have developed. They're strictly from market data. Every second we know what is the position. What they show is the business cycle, the ups and downs of the business cycles. As you know, as I told you before, when it rises, it means the economy is strengthening and cyclical sectors are outperforming the market. When the indicators decline, it means the economy is slowing down and the defensive sectors outperform the market. And this is so the strengthening, weakening. And right now, since April, early part of 2025, the indicators have been rising, pointing to a stronger economy and possibly a outperformance of the cyclical sectors. However, let's review now all the sectors one by one and let's see what they say. I would suggest you take a piece of paper and a pencil so that you write our conclusion for every chart, and then at the end of which you know exactly what the market is thinking about the economy, about everything else. Okay, I'm trying to take all the sectors randomly with no logic sequence, just all the major sectors of the S&P 500. The charts that will show you show two lines. One, the price, and this one, which is the most important one, the blue line, is the relative strength. But the relative strength computed as the ratio between XLI and the S&P 500. I used SPY. So if the lines increases, it means the particular sector is outperforming, that is rising faster than the market. And this is what we are going to concentrate. For instance, right now, since here around June, the industrials have been particularly strong in outperforming the market. So what is the bottom line of this? One more thing. Why this relative strength is important? Because more often than not, it leads the actual market. Why? Because really it represents what the big money is thinking and how the big money is investing. If you see the relative strength, one sector is beginning to outperform. This means that the big money, the BlackRocks and Fidelity and Vanguards of this world are beginning to pouring out in that sector. That's why it's important to follow this line here. So what has been industrial performing since the early 2025 has been the basic trend is up. By the way, this is a moving average, a 50-day moving average, and the red one is to give us a 10-day moving average to give us an idea of what the price is doing. So as you can see, the yellow line is rising, the red line is rising, means the relative strength is strong. It definitely the industrial, so put right down on the piece of paper, the industrials are outperforming the market. This is the graph of Bitcoin, and this is the price has found resistance at this level. It broke resistance, now is sort of on this trend line, which is I'm watching closely because if it breaks down, there is a correction coming. However, what you see is the relative strength has been long-term, has been rising, meaning that Bitcoin has been appreciating faster than the market, and the current trend, even the short-term trend, is slightly up. So the strength of Bitcoin means that there is liquidity in the system because it's very closely related how much money the government or the Fed pours into the economy. So its strength is welcome for the market. This is the chart of gold. This is the price. It moved above this trend line that is connecting various peaks. And I always told to my followers that every time the price touches one of these top of this line, usually the price doesn't do much afterwards, and this time is no exception. Gold is found a resistance. Relative strength is down, so it's not attractive because it's been underperforming since April when the bull market started. It underperformed. The relative strength is declining, so it's appreciating less than the market. So obviously there is no crisis in sight if you believe that gold represents a warning about future crisis. This chart shows the price action of technology, bottom in April, strong rise, and as you can see, the relative strength is strong. This is a very strong sector with stocks outperforming the market quite visibly, very, very strong, breaking up above this resistance level. So XLK is a very strong sector, contrary to, for instance, gold. This ETF is growth stocks. And again, you see bottom in April, strong rise above resistance, relative strength, very strong, short term and long term. So investors believe in growth. The investors believe in industrials, but they do not believe much in gold. So far, this is what the market is saying. A sector that is very interesting is the metals and mining. Look at April, strong rise since the bottom, but look at the relative strength, really, really up very strong, outperforming the market. It's unbelievable how strong it's been. So obviously, investors are pouring money into, as you're beginning to see the picture, industrials, metals and mining, technology, growth. The picture is slowly emerging. PAVE is an interesting ETF. It is the Infrastructure Developments ex-US. So this is what investors think about investments, global investments in infrastructures. Now, as you can see from the relative strength line, the blue line, short term and long term, they're all going up strongly. So this sector is outperforming the market. So this is another sector where investors are putting their money in, believing that growth is going to be also global because in foreign global investments. This sector is the financial sector. And as you can see from this line, has been underperforming since April, both long-term, the yellow line, and short-term, the blue line. This is bothering me a little bit because how can you have investment in growth, in infrastructure, in technology without support from the financial sector? So this is sort of a fly in the ointment, I guess. This is the communication services. It has outperformed until March, April. Even if it went down less than the market. But then performed like the market since April. But then in the last 2 months, as you can see, has been underperforming. So the communication services is underperforming the market at the present time. This is the chart of the retail sector. Has underperformed heavily in early 2025, late 2024, and early 2025. It sort of outperformed until May, but then really has performed like the market here. So the good news is it's not falling apart, it's not underperforming. So it's saying the consumers are doing okay, not great, but doing okay because the retail sector is performing like the market. This is the graph of staple XLP. And again, going at the relative strength, in the first half until April, they were outperforming, although doing very poorly in price, but they were outperforming the market because the market was going nowhere. In fact, went down quite sharply. However, since the beginning of the rally in April, the staples underperformed the market quite sharply. As you can see, both the short term, the blue line, and the long term, yellow line, underperforming the market. So the relative strength is down. Investors are avoiding staples have been avoiding staples since April. The utility sectors, XLU, is another defensive sector and has performed exactly like the staples. And beginning in April, when the market started going up, although the utilities rose, they underperformed quite sharply since April. Both near term, the blue line, and the long term relative strength, the yellow line, are coming down. However, it's interesting now this beginning to outperform the market in the last several weeks in July. I wonder if investors are beginning to positioning in defensive sectors. However, it's too early to say. The bottom line is utilities have been underperforming the market. Investors are not buying utilities. This is healthcare sector. And as you can see, they've been underperforming the market for a long time, and especially in the near term. Investors are now, again, healthcare is another defensive sector, and definitely investors are not going there at all, given the underperformance of the sector relative to the market. The real estate sector is another defensive sector. However, again, in fact, you see have outperforming the market when the market was weak. However, since the rally since April has been underperforming the market by big time. So investors are also avoiding this important defensive sectors, which again, as I said, from April has underperformed the market big time. What about the international market? This is VEU, the Vanguard All World Market ex-US. And they've been outperforming at the beginning of the year. Everybody said the international is the way to go. And in fact, they've been outperforming since the beginning of the year until April, May. However, that was just 3, 4, 5 months outperformance. Since April, they've been underperforming. Most markets that we follow in April, the relative strength has been coming down. The prices has been going up, but international stocks have underperformed the US market. The US market is and will continue to be the strongest market on the planet. Well, I told you to use a piece of paper and a pencil to write the strong and the weak sectors. Really, you just see so obvious where the investors are putting their money. This is where the money goes. It's obvious from this analysis, which I think is very, very useful. Now, where investors not putting their money? Definitely in defensive sectors. The staples, utility, healthcare, real estate, they are underperforming the market. This means that investors, the big money, is not going there. Not even in gold, actually, because gold is also underperforming. and also international stocks. International stocks, as you see, VEU has been underperforming. This is not where the money is going. Where is the money going? Well, the money is going in industrials. It's going into, well, it's going to Bitcoin because there is liquidity sloshing around, as I told you in my publication. M2 keeps on growing faster and faster. Technologies, metals and mining, and infrastructure. So what does it mean? Investors, the big money, believe in growth, believe in investment, believes in industrials, and believes in continued progress in the US economy, not as much in international, but US economy. So this is the message of the market. And believe me, I do this analysis every other week for my publication, and it's been right on the money because it tells you where investors, the big money, is investing. And is right now they're investing in growth and infrastructure. Thank you very much for following this video. I hope you found it useful, this type of analysis, which really says very simply, investors, the big money believes in growth. There is no recession as far as current analysis is concerned. They don't believe in recession, depression, or anything. They believe in growth, metals, mining, industrials. So this is, I think, the message of the market is good news.